SoFi stock is continuing to stay near 52-week lows as other fintechs in the space are missing revenues and lowering future guidances. However, some SoFi bulls are saying that there still might be reason to believe that SoFi is going to outperform this quarter. One of the reasons being that regulated banks outperform in interest rate rising environments. This could be a different story, however, for companies like Robinhood or PayPal, which also do have lending departments, but they also have sweep partners and middlemen that also take a higher cut. So they end up paying higher fees and higher expenses for the exact same product that a regular legacy bank would be paying. In fact, you can see how differently they would perform whenever you look at Q4 earnings for both fintechs and legacy banks. Look at JP Morgan, for example, Bank of America, or even Wells Fargo. Whenever they reported on their Q4 earnings, they both beat revenue expectations and increased their dividends on good outcomes. Whereas whenever you look at PayPal and Robinhood, they both actually missed on revenue expectations and lowered future guidances. Although being in a very similar industry, they reported very different outcomes. So the real question that you have to be asking yourself, if you're a SoFi investor, is are we going to have to suffer through the same fintech style Q4 earnings that are an absolute disappointment and, bad outcomes because obviously we weren't a regulated bank at the time? Or is SoFi just going to disregard what's happening in the fintech space and just blow people away because, well, this is Anthony Noto and that's just what he does? There's no question in my mind that I think Q1 is going to be great. I mean, with the Super Bowl, I think we're going to see a massive amount of high member growth during that time, as well as with the banking, charter finishing. I think that's going to happen within February and March, that these new accounts, checking and savings, are both going to be coming out, which is just going to help expand everything perfectly in time for the Super Bowl. Anthony Noto said that this was a huge weight off his shoulders and actually clarified on Mad Money, saying SoFi currently offers 4 different types of loans, and since they only lend to high quality applicants, their loan performance to date has been far better than traditional banks. With the banking approval, SoFi will now be able to offer products in all 50 states. This is up from just 40 states today. And that's just another point to add on to all the additional amazing points that we're seeing from SoFi, just success after success. We rarely see anything bad come out from, SoFi. Maybe the fact that we actually got delayed on the student loans and that was bad, but I mean, that's a 3-month delay. We're not talking about member losses or average revenue per user going down or anything along those lines. It's simply the fact that we just got delayed 3 months as Biden gave an additional, relief to student loans. It's crazy to think about how successful SoFi has been in expanding their products and service lines, and that's only going to get faster as now that we have this banking charter. And whenever you think about, some of the obvious products that they can expand into, like options trading and margin accounts, this is only going to lead more into higher average revenue per users. But one thing that I wanted to bring up was the idea that there's so many different companies that some people might go to a specific company for, like Robinhood for options trading, or Coinbase for cryptocurrency accounts, and PayPal for maybe sending money or something along these lines, right? There are certain reasons why people use different fintech apps. And that's where SoFi really separates themselves from what all these other companies are doing. And that's the fact that they have that all-in-one digital business model. With the new checking and savings accounts, they're going to be offering 1% annual interest rates, okay? Which is 33 times higher than the national average. This is so important and way past the idea of just more assets under management for SoFi money. That part is actually the way smaller part than the idea that we can actually really take on everything that the banks can do. There'll be no reason, if you're comfortable with digital banking, which is getting more and more common, to actually want to use traditional legacy banks. Any of the products that they're offering at, your JP Morgan are quickly becoming smaller and smaller, and the upsides for going with SoFi, like the 33 times higher interest rates in your checking and savings with no account fees, no overdraft fees, all these different things, 2-day early paychecks, everything. And you're going to go from having these customers that only might have $2,000 or $3,000 in your investing account to having every single paycheck through direct deposit go to SoFi's money. And then any additional amount that they can save long-term goes to their long savings accounts. And then their insurance goes to SoFi Insurance. And then their loans, if they want to get a mortgage or something like this. Their full financial life is being completely hosted on this digital bank now. It takes the LTV of our original customers through the roof. That's lifetime value of a customer, right? It's the big statistic whenever it comes to banking, and what makes it so important to get that fintech to that regulated bank, because with these higher margins, we can offer so many better services. And And these regular legacy banks with all their physical locations just can't compete because they have more staff that they have to hire on and more rents and higher amounts of expenses because of these physical locations that don't actually bring in new money. Yeah, sure, you're servicing existing clients, like people that you can't get rid of. And so you can't fix those expenses or fees, but yet it's not bringing in new money because most of the people that are using those branches still are old, they're retired, they're not bringing in new income. They're living off of their existing retirement accounts, which are actually drawing down. So what we don't have at SoFi of these, retirement accounts and all these things of older, that older age of clients are actually better for us because we have growing clients, not the actual shrinking clients of the ones that are actually using and spending their money. Over time, as direct deposits continue to pour in, bringing up our assets under management, and now those existing clients are now looking at potentially getting a mortgage. And so they go through and they do their regular shopping across all the different banks, including SoFi now. They'll see that we have better rates because we don't have those high fees. And we all have the same options because we're all partnered with the Federal Reserve, but yet we don't have those high fees. We're going to be able to beat them out in the lending section as well. People are going to be so blown away with the service that SoFi has to offer, not even knowing how they're doing it. And so they're going to have to refer their friends and family because people are going to want other people to realize what they've found with SoFi. This is going to continue to expand the market share for SoFi, all while digital banking becomes the new norm. Not to mention that the total addressable market for finance in America continues to grow industry-wide. And this only gets pushed forward if inflation continues, right? Like, banking is immune to inflation because whether you have $100 in your account, we take 1%, or there's $1,000 in your account, we take 1%, we get the same fees. It's all extremely exciting, and it's just getting me more excited to realize that I'm not looking at this company anymore at being a $30 price target, $40 price target. I'm now looking at what it's going to be in 10 to 15 years. I'm truly looking at this company very, very long term now. I don't care whether we have 3.2 million users or 4.2 million users. What happens to this company whenever we have 15, 20, 30 million users? And that's only to add into the fact that I think the valuation for this company is already extremely low. Like, whenever you compare their expected growth rates and then their price to sales compared to another company like PayPal, look at their price to sales and their expected growth rates of like 13%. Like, how, and that's after they've dropped already like 70% off their all-time highs. Like, these are not even comparable in how valuable this growth can really be. This is truly discounted growth rates. And all to mention, whenever we do get to those 15, 20, 30 million customers, dividends for banking industries are going to be so high because they're trying to attract new investors. And whenever you're in at a $10 or $11 price range, that really bodes to benefit you whenever the company starts to give out a 1% dividend and it's already 10x from where that position is, you're going to be receiving a 10% dividend. I could go on and on about SoFi. And if you guys want to hear more about SoFi, make sure you guys hear about what the analysts are saying about this company right here. Make sure you guys give me a like and subscribe down below if you want to see more financial content just like this.